Hi, everyone. So today, Dom and I are going to be covering a new company called Cloudflare. Dom's going to share his screen and we're going to take a look at the company analysis.
Thank you. All right, let me know if you can see this.
Perfect. Yeah.
Cool. Okay, so Cloudflare is basically just like a security service. They provide to honestly both companies large and small. So want to think of things like firewall, bot management, DDoS protection, things like that. Their network really helps to make sure that companies have almost like seamless interruption from any type of potential attacks, and that their customers can work essentially wherever they need to without the fear of like data being leaked and things like that. Um, One thing I did want to note that I thought was kind of interesting is that not only do they provide, their service to bigger companies for data protection and things like that, but for smaller companies or people just starting out, they do have a like they call it pay-as-you-go model. Basically, it's just like if you're just starting out, if you're pretty small, you can just pay for whatever you need specifically for whatever you're working on instead of having like a constant subscription plan, which I thought was kind of interesting to kind of reach all aspects of like the market, not just like the higher, bigger players in the game. So that's kind of what Cloudflare is, and I'll let Matt take over and kind of talk about the financials of the company.
All right. Thank you, Dom. I appreciate it.
No problem.
All right. So I'm going to go ahead and share my screen, and we're first going to tackle the earnings to see their most recent earnings to see what's going on. So they've had quite a great revenue increase year over year. Now, this is for Q2 2025, and since then, same time last year, they've increased 28% year over year, which is incredible. This has marked the first time the company exceeded $2 billion annualized revenue run rate, and as a result, this company for the past year, if you check on Google, they've been up like 170%, 177%. So they've really had quite a run so far this year, and it's very much well deserved, I would say. Now, the analyst estimate is 501 million to pass the current estimates. Revenue from large customers paying over $100,000 annually grew by 35% year over year, which is great. For the full year 2025, they actually raised guidance because of the strong Q2 earnings, which is always a great thing to see. Their revenue guidance for Q3 is 543 million to 544 million. And this I thought was interesting was their historical revenue growth rate. So if you see for 2022 was 48.57%, 2023 is 32.97%, 2024 is 28%, and now it's pretty much 28%. So that hasn't changed. But really just incredible rates of growth here. And Cloudflare aims to reach 5 billion in annual recurring ARR revenue by 2028. So really good to see. ARR is that metric that a lot of these subscription cloud-based companies use, these software companies use. So really glad to see that with Cloudflare. Now, the next thing to see is their free cash flow growth. 2021 is negative 43 million. And now they've actually turned positive in 2023, and they are crushing it today. So 179 million. So they've, in the past 5 years, negative 43 million to positive 179 million. Really good overall. This is probably the more interesting part is their future growth, which is very good. 179 million, like I said. The next 3 years, it's going to be 557 million. Excellent. This is exactly what you are looking for when it comes to something like this, like a really huge rate of return. Their growth looks excellent here, and they're at like a $75 billion market cap. So they're pretty much going to triple or double 2.5x in the next 3 years. Now, if we check the financial health of the company, which I'm going to pull out in a second, financial health of the company, it could use some work because if you see here, it was pretty stable, slowly increasing. And then you have cash skyrockets this year. The debt also skyrockets, unfortunately, and the equity is lower. And you do have here this red blurb, reducing net debt. Cloudflare's debt to equity ratio has increased from 43.8% to 263% over the past 5 years. So they do give you a little bit of a warning. However, their rate of growth is so massive that I think it probably wouldn't be a problem overall. The next thing we should see is MyDCF, and this is the problem that you have with these companies that grew significantly. Keep in mind, Cloudflare has been growing substantially well. It's 177% up already this year. And you have it that's overvalued 69%. So this is going to be the case because the growth has been explosive. And if we check Wall Street forecast, because that was historical, it's 85% overvalued. So problem is, however you look at it, it's going to be very, very expensive at this moment in time. Although a great company. And lastly, which I have to keep reloading, is Tipranks. And if you could see quickly, it's a moderate buy, 15 buys, 8 holds, 2 sells. So, and let me just see the upside on it so the viewers can see. So the upside isn't that great either right now. And that's the problem with these types of companies, is they have had such an explosive growth that even the analysts are saying that there's not too much room to grow even farther. The shares aren't cheap right now, and that's probably one of the bigger problems. Dom, is there anything you wanted to add?
No, I pretty much agree. Like if it, grows too quickly, it can be nice if you were already in there earlier, but like right now, like it's peaking. And so
Yeah,
like is it gonna just keep getting higher or will it kind of stabilize and taper down a bit? Like that's the hard
yep,
part of stocks. And so it's definitely one of those things you kind of have to go with your gut, in my opinion.
yeah. I think Dom and I will cover it in the future again, maybe a year from now, just to see if it's sold off and it's a better price. But it's definitely a good company, so just very expensive.
Yeah,
Yeah. All right. Thank you,
100%.
everyone. Thanks. Thank you, Dom.
Thank you.